Today's inflation data came in weaker than expected, and that caused the equity markets to bounce back. Is this the start of the so-called Santa rally? We've now had most of the week's macro events out of the way. Today we had the CPI data coming in much weaker than expected, and that has raised the possibility that the Federal Reserve has room to cut interest rates further in the early parts of 2026, which has boosted equity indices from their early lows, and we've seen the US dollar come under a bit of pressure, although not against all major currencies. Now, looking at the economic calendar, there's not much left for the remainder of this week. The Bank of Japan policy decision is arguably the most important macro event left on the economic calendar before things die down ahead of the new year. Among the major US indices to keep an eye on, I think the Russell Index is an interesting one, given that the technology-heavy indices like the Nasdaq have come under a bit of pressure of late because of concerns about the AI bubble and everything else. Although it's too early to suggest the markets have topped in those sectors. But looking at the Russell itself, we've got a rather bullish-looking chart in front of us. The index only recently broke above the previous highs that were hit in 2024 and 2021. And although it didn't hold there, the resulting sell-off wasn't significant, and we stormed back from around the middle of November to create new highs. So for as long as the index now holds above the previous record highs that were hit in those years, the shaded grey area, the path of least resistance will remain to the upside. The key question now is this the start of the so-called Santa rally? Well, given that it happens almost every year, I wouldn't bet against it. But, we need to proceed with a bit of caution until we have some more clarity. Because in the last few days, the index has been heading lower before bouncing back from this area of support. So we need to see a break above a resistance area, namely this green line here, which was previously resistance on a couple of occasions. We broke above it but failed to hold there. So we need to go above that for extra confirmation, I think. If that level were to give way now, I think this will be quite bullish, leading to sharp gains in the latter stages of this year. So that's the key level to watch. On the downside, 2,490, this blue line here is a very important short support. Below that, this gray area between 2,460 to 2,468. If that area were to give way, then I think this will turn quite bearish in the short term anyway, and in which case we could possibly see a continuation towards this shaded green area on the chart. But that's the alternative scenario for me. My base case scenario is that we could potentially see some further gains in the days ahead. With the US CPI coming in weaker today, we saw price of gold. Actually, it fell initially before bouncing back. It has bounced back though, and it's now approaching the all-time high hit in October at 4,381. Can it get there is a key question. And if it does get there, what will happen next? Can it stay above it, or do we quickly go back below? What price does there will give us an indication about which direction gold is most likely headed in the last few days of the year. So a false breakout scenario would potentially lead to a drop towards this support area. And then if that gives way, we could be talking about 4,000 again. But at the time of recording, gold was looking quite strong, and it looked like it was going to break out to a new high above that level. So keep an eye on gold prices, as it could provide you lots of tradable opportunities heading towards year end. For more market updates and insights, head over to City Index, and I'll see you in the next video. Take care.